We're all on this sort of fiat debasement boat together. And Bitcoin has been this shining light, which has been the best performing asset in human history since it launched in 2009. And so I think that this has been a great ride. And obviously it's still early, for people to get involved in this industry. I wouldn't say that just because you're coming in at 2025 and Bitcoin's at 120,000 or whatever it is, that you've missed the boat. We still have a long way to go. So I think at the end of the day, everyone's trading the forward on sort of the MicroStrategy play. So Obviously Saylor has hit it perfectly out of the park. I think, is he in the NASDAQ and S&P 500, whichever index? I'm not sure which one he's in, but that's the goal, right? It's get the passive indexers to have the set it and forget it flows, right? I think the Capital Group is like one of MicroStrategy's largest holders. Who would have thought Capital, this like stodgy, long only fund manager, owns like one of the most, leveraged, financially engineered equities in the world.
Arthur Hayes cautions that as inflation, public debt, and political unpredictability collide, the world economy is balancing on a tightrope. He contends that the political climate around the 2024 election will influence the Fed's future actions in addition to economic facts. According to Hayes, more fiscal spending and liquidity injections may cause inflationary pressures, which would drive investors toward assets like Bitcoin. However, he warns that as politicians balance long-term credibility with short-term survival, volatility will rise. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
So I think there's a high probability that while, probably ultimately the Fed will cut at some point, whether it's Powell or whoever else replaces him or whatever, maybe Trump fires him, whatever it happens over the next year. But I think there's a high likelihood that Powell sticks it out and just says, fuck you to Trump and doesn't cut. Just because he's a human and human beings don't like to be put in these sort of situations. And I've been having this argument with a lot of very senior and prominent macro writers who, put all these reasons why Powell has to cut and, why his job is so, uncomfortable, being sort of the foil at which Trump launches all these tirades against. But at the same time, what a better way to prove that you are an independent monetary actor than just say, no, I'm sticking with my guns. I think that 4.25 to 4.5% Fed funds is neutral and fuck you, Trump. And because I'm Jerome Powell, I'm an independent head of the Fed. So I think there's that continuum. I don't know where it's going to come out. It ultimately doesn't matter. But I guess if you're a trader, then obviously this is a very important speech he'll give on Friday. At the end of the day, it comes down to a question of sort of how badly do Trump and Bessent want to keep the Republicans in office in 2028. I think if you had an election today, I think it'd be 50-50 on whether they'd stay in power. It's a pretty evenly split country. I think Trump knows what he has to do. He's got to print the money. He's got to hand out the goodies. And so the question is, how quickly is he going to hand out the goodies? What is the method in which they're going to do it? It sounds like, Bessent and him are on board with doing it. The question is, how quickly is it going to happen? It's going to happen, whether it's today or a year and a half from now. The desire is there, and no government ever, when they have the printing press, refuses himself the ability to print money and hand out goodies to the people to win elections. That just doesn't happen. So I just think it's a structurally long trade. I know people are worried about sort of the 4-year cycle in crypto, like, oh no, because of things historically. But we're in a different situation. We have US versus China economically, hopefully not militarily, combating. You have two different systems, but at the same underlying impetus, which is credit creation. China is very adept at creating credit to hand it to whoever does what Xi Jinping and the Communist Party wants. Trump is going to do the same thing. Who does what I say they're going to do? Okay, well, I'll hand you some credit, whether it's through the banking system, whether it's through Fannie and Freddie, whether it's through yield curve control, whether it's through central bank swaps. Like, there's so many tools that they have at their disposal. And I think, they're just getting started in the ways in which they're going to hand out credit to those who do what they want them to do. If Powell comes out and says, I'm not raising, or doesn't talk about cuts at all, and market tanks 15-20%, I've got some extra cash and I'll be going shopping on some things that I think are cheap, just because I think that Trump and Bessent are just setting up such a perfect situation for how money is going to be printed post 2026 in May. And I guess listen to a CNBC interview with Zarvos, one of the Fed chair hopefuls, and if that guy gets in, Bitcoin will be at 15 million, because he's just going to do yield curve control, printing money, immediate 300 basis point cuts, all sorts of things. So I think Trump and Bessent have laid out exactly what they want to do, run it hot, inflationary, all these sorts of things. Powell is the only thing standing in their way. And, come hell or high water, Trump will get what he wants. The question is, how difficult is it, whether he has to fire Powell or, there's just ways to do it. A house costs 75% of your disposable income and all these sorts of things all around the world. And so I think it's a global phenomenon. Unless you're extremely wealthy, you feel the effects of this inflation that every single government, regardless of whether they're, completely communist on one side or capitalist on the other, everybody does the same thing. We're all in this sort of fiat debasement boat together. And Bitcoin has been this shining light, which has been the best performing asset in human history since it launched in 2009. And so I think that this has been a great ride, and obviously it's still early, for people to get involved in this industry. I wouldn't say that just because you're coming in at 2025 and Bitcoin's at 120,000 or whatever it is that you've missed the boat. We still have a long way to go.
According to Arthur Hayes, every government eventually devalues its currency through money printing and inflation, regardless of its policies or politics, as everything else is pulled down with it. He believes that Bitcoin is the one asset that stands out because it resists this constant devaluation. Cryptocurrency's worth is therefore not solely based on speculation, but also on its ability to endure in a financial system that is meant to depreciate over time. Hayes even likens the possible effects of future monetary policies to the huge stimulus of the COVID era, stating that they might propel Bitcoin to new heights in a bull run that surpasses all prior highs. Also, a quick reminder, only a small percentage of viewers are subscribed. If you enjoy deep dives into crypto and finance, hit that like button and subscribe. It's free and helps the channel grow. Now let's get back and hear what he has to say.
So I think at the end of the day, everyone's trading the forward on sort of the MicroStrategy play. So Obviously Saylor has hit it perfectly out of the park. I think, is he in the NASDAQ or S&P 500, whichever index? I'm not sure which one he's in. But that's the goal, right? It's get the passive indexers to have the set it and forget it flows, right? I think the Capital Group is like one of MicroStrategy's largest holders. Who would have thought Capital, this like stodgy, long only fund manager, owns like one of the most, leveraged, financially engineered equities in the world. But there it is. I think it's some insane amount of flows. But why could they have to? They have an index. The index says this: I have to buy these stocks, whatever's in the index. I don't care about any other metrics in the business. And you could say that's a bad thing or good thing, but that's just passive investing. And that is the ecosystem in which Western financial markets are in. And so that is what these DAT companies, at least the ones that are going to be successful, who will have an MNAV above 1 for a long period of time. That's what you're trading. You're saying, I'm a retail investor. These things are not in the index yet. But if this company is able to have a certain amount of average daily trading volume, if the market cap is above a certain level, if their industry on Bloomberg is X, then this cohort of fund managers has no choice but to buy this stock. And they could even hate Bitcoin and think it's going to zero or whatever the shitcoin is that it's in the Treasury. It doesn't matter. Their job as a fiduciary is to match the index.
Yeah.
And that is the play. And that's all it is. That is why people are paying $2 for $1 of earnings or assets. That's it. And so I don't know how successful any of these DATs will be. Obviously, I'm an advisor of UPXI, and this will be my advice to that particular companies. Understand who it is your end buyer. And it's not, Robin Hood retail Muppet. It's, dude in a Brooks Brothers suit in Connecticut at the golf course who doesn't know anything other than like just buy the index. That's it. Because once you get into that flow, it doesn't matter what your company does. As long as you're not committing fraud or doing something else, the stock price is just going to go, you're going to get inflows. And so I think that's the challenge for all of these DAT companies, is to get their trading volumes and their market caps high enough so they get included in the indices. That's the game. There's two pools, and you mentioned one of them, sort of these foreign retail deposits. There's two pools of money, which I think best via monetary policy and aggressive use of terrorizing sanctions can make people on board in the stablecoins. The first is the Eurodollar market, right? So, 1950s and 60s, Eurodollar market was created because of all the regulations and prohibitions around interest payments and trade flows that the U.S. Monetary authorities were putting on commercial banks. And so you have these foreign branches of U.S. banks and foreign banks saying, hey, I'll take your dollars outside of U.S. control. And so we have this $10 to $13 trillion market, which nobody has any control over. Oftentimes influences Fed and Treasury policy in terms of when dollars become expensive and cheap in the Eurodollar market. And you can probably trace almost every financial crisis outside of the United States to Eurodollar market flows. And these flows are not doing what Bessent wants them to do. He can't control them. He doesn't know where they are. And he can't make them buy what he wants, which is Treasury bills. So my idea, and maybe he'll do this or maybe he won't, I don't know, is right now, why do you feel comfortable in a Eurodollar? Because every time your banking institution has gotten into trouble, the Fed, the Treasury bails you out, even if technically they shouldn't be doing it so, because you're not a member of the discount window, don't follow U.S. regulations. But we can point to many even 2008, the Fed secretly bailed out all these foreign branches of banks for all their bad trading policies to make sure the Eurodollar depositor was sweet. So the first thing Bessent should do is say, hey, guess what? If you don't have your money in a U.S. branch of a bank or a U.S. bank inside of America, you do not have a guarantee any longer. We will not come and save you anymore. So all of a sudden, these dollars like, oh, okay, well, there isn't this blanket government guarantee from the Fed and the Treasury for these trillions of dollars that I have deposited on these banks. But I could put my money into a stable coin. And the stable coin means that the dollars are either a deposit at a U.S. branch of a bank in America, or they're holding Treasury bills. So if you don't feel safe in your Deutsche Bank account in Switzerland or wherever, just talk to your authorized participant and move these deposits over to a stable coin. And now you have access to your dollars. You have the blanket guarantee of the U.S. government. And guess what? You might earn a bit of a yield on your money, because we probably don't get much of a yield in a Eurodollar deposit outside of America, because the banks don't actually need your money and they have to pay capital charges because of Basel III and blah, 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 right? All the bad things about why banks don't like large deposits. And so now you have, a 10 to 13 trillion dollar TAM of money that could flow into stable coins from abroad. And once you're in a stable coin, Bessent has full control. He knows where you are, which bank. He knows where you're clearing your treasuries. And the best part is, he can offer you a yield that's lower than Fed funds. So if Fed funds is 4.5, he can say, oh, guess what? I'll give you 2 on a 6-month T-bill. And you say, well, I can't really do anything about that because I'm not going to go into a U.S. bank deposit. The banks don't even pay you anywhere close to Fed funds. So fuck it. I'll just buy the 2% that Bessent offers. So Bessent can, in one fell stroke, completely neuter the Fed. And no longer does the Fed have any control over Fed funds, because Bessent can offer the Treasury bill at whatever price he wants, unconstrained by what Powell or whoever his successor does.
Arthur Hayes presents a broad concept for rerouting financial flows into stablecoins. He cites the Eurodollar market and worldwide retail demand as 2 enormous money-moving pools. He begins by discussing the Eurodollar market, a between $10 and $13 trillion structure that arose decades ago when banks sought to use U.S. money without being subject to U.S. restrictions. Although this market has expanded significantly, it is uncontrollable by the Fed and has contributed to numerous financial disasters. According to Hayes, investors would lose faith in Eurodollars if U.S. officials ever stopped providing bailout guarantees for dollars kept outside of the country. Stablecoins, which are safer because they are backed by U.S. Treasury bills or deposits in American banks, may be their first choice at that point. That would include having currency that are safe, traceable, and even yielding for investors. It would give the U.S. government more authority over international currency flows, which the Fed has been struggling with for many years. The second source of funding that Hayes mentions is global retail investors, particularly those in Asia and other developing nations, finding methods to exchange weak local currencies into U.S. dollars, which are then used to invest in more robust assets like stocks or real estate, is the primary financial strategy in many of these nations. Regulators, however, frequently crack down, making this process unstable and dangerous. Hayes contends that stablecoins could address this issue by providing a straightforward digital method for people worldwide to convert their savings into U.S. dollars without depending on dubious banks or shadowy financial networks. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.